Okay, and welcome out to our halftime report here presented by TackleTrading.com, a community of traders. And we've got Coach Matt and Coach Tim here, couple of brothers hanging out on a Monday morning, Matt, 11/12/2018. Now, yesterday was Veterans Day, but today we are observing it. So just a quick shout out to the veterans. But how are you doing this morning, brother?
Yeah, doing really well, Tim. Excited to be here today. Excited to be hanging out with the halftime crew, getting everybody ready for the week coming up in the market. A couple things. Number one, very, very happy Veterans Day to all of our veterans. Something that all of us support, and big shout out to them, obviously. And then, and obviously with the California wildfires just getting worse and worse and worse by the day, just, thoughts and prayers with everybody there in California that's being impacted by that.
And I've had enough friends who are veterans or are currently serving in the military. And not everybody loves to have all that recognition. I get it. They get a little shy sometimes about it, but I will say it every time. Thank you for your service. I do appreciate it. The longer I live, the older I get, the more important just those things are. There's no question about it.
It's no doubt. Never forget. Right. Never forget. Shout out to all the veterans. We love you guys. We support you, all that jazz. So, yeah, never forget.
All right, market prep day. Every Monday on our halftime report, what we want to do, Matt, is kind of set up the entire week. And there's a lot going on out there. Market volatility is coming in hot here on a Monday morning. We are down across most indexes. The commodity market also showing some volatility, but currencies breaking out to the upside. We need to break down all those different areas. But one thing that we like to do on a Monday, Matt, is do sector preparation as well and look at all of the different sector spiders by ETF and kind of talk about where the strength is in the aggressive or defensive sectors. Let's start with the S&P 500, Matt. You said something very interesting to me. That is a developing inverted head and shoulders. Now, it's got to hit the second shoulder here, but that pattern could end up becoming a real interesting one if you do confirm this lower shoulder. Kind of break that down for everybody.
Well, a couple of things. Number one, we don't know exactly what's going to form in the future. What we know is what's happening today, right? And that gives us possibilities for a future expectation. But I never really believed that if the market was just going to snap back, that would be a clean entry, Tim. It was just so difficult coming into that. I mean, as the market was just snap backing the last, 2.5 weeks, coming into the resistance channel, I've said this many, many times. I'm just not that comfortable buying breakouts that have ran too far. A lot of times what will happen is it will slow down as it hits that resistance channel. It'll come back down into support as it's attempting to do right now. And then that becomes a cleaner signal off either a bullish retracement in the short term, or eventually, it goes up and it breaks out of that 2820 barrier that we talked about last week. So we don't know yet, obviously, but when you see the left shoulder here and the right shoulder here and the head here with the neckline right there at that 28 to 2820 level, at this point you are seeing the very beginnings of a head and shoulder formation in the short term. However, Tim, the market is selling off today on some negative news, some slowing, some forward guidance got cut that impacted Apple. Apple's down 4% today. That's obviously going to have a big impact on the market, but keep an eye on that developing pattern.
Apple Computer is in the news here today and has the highest volume by price filter out there. That means the most money is moving through that product here today. And it's a big one always. It's always on the top of that list. But I did see that news and I found that kind of to be a head scratcher a little bit. Lite, L-I-T-E, is a supplier to Apple, right? And they're the ones who cut their guidance. So bring up Lite if you would. Now, obviously, that stock taking it on the chin, and they came out and said some real negative things about what they think they can sell in the future. And because Apple, is one of their biggest purchasers, Apple also is seeing some volatility here today. So, Matt, are we overthinking that news? Is that one of those overreactions, or is it just, hey, price action, baby, and you got to trade what you see?
No, I think a couple of things are going on. Number one, a major supplier for Apple cut forward its second quarter guidance. That is absolutely going to have a negative impact on Apple, especially in the environment, the psychological, the emotional environment that we're been kind of in since the beginning of October. So when the market is looking for a reason to do something, it doesn't need to look hard to find a reason to buy or sell. And that's what was happening today. You didn't have any positive news coming into the market. The market sold off coming into the close on Friday. Over the weekend, there was no real positive news coming out of any economic system, and the market carried over in its selling coming into today. Coupled that with a slight negative news coming out of this company here, yeah, it's going to have that impact. But Apple down 4% is certainly weighing on the overall marketplace. But we've seen this play out before, Tim. Immediate movements down in the open. Watch that intraday channel. Okay, watch those intraday channels. So let's drop this down very quickly into that 15-minute chart here, Tim. You really don't have any. You're kind of in no man's here right now if you're just looking at the 15-minute chart. But if you'll remember, Tim, that these levels right here, if you look at this kind of on that 4-hour chart, these levels were major areas of support in that from it was about now a month ago, really. So these major areas of support in mid-October are the same levels you're kind of coming into right now. And if you'll remember, it's that 2750 by 2740 barrier. That's exactly where you're at right now. So keep an eye on that level. If those levels do hold and we do get some degree of slowing momentum tomorrow, that could be a buying opportunity, but it has to hold. If those levels are broken, Tim, you really could see volatility increase down to 2,700.
Yeah, quite a bit of volatility in general, Matt, in the market. This is the kind of day.
Can I ask you a question real quick?
Yeah.
When did volatility become the word for down?
I was actually going to point out upside volatility as well. Last week when we were all the way down, we only saw on red days, it's very common where the market will just envelop it. Is that the right word? Am I getting an envelope? Envelop. I don't know.
Develop.
It will just kind of swallow the entire market, and you just see red. But I'm seeing some 3-4% movers on the S&P here, Matt. Conagra Foods, Coty, NRG, First Energy, some utility stocks and consumer staples. That's not usually a good sign, which is why it's very important to understand sector relationships. So the big gainers are in defense and the big losers are in weakness. There's a stock I've got to bring up pretty much every day these days. Give me a look at GE, S&P 500 component. And of course, it's just down another 5%. Where's the bottom at, Cora? Where's the bottom at, Bottom Fishers?
Zero's the bottom, Cora. Zero's the bottom in GE.
Do not try to catch a falling knife, obviously.
Tim, they announced another 5 million shares buyback, and it's still going down.
It's down 40% in the last 3 weeks. Okay. So this idea that we're going to bottom fish because it's a big name blue chip company, it's got to come back up. No, it doesn't. Fundamentals matter. Technicals matter. And obviously you got to trade what you see. It's now like my favorite thing to see every day, by the way.
here's when you trade GE to the bull side. In the next recession, when the U.S. government steps in and loans them $5 billion so that they don't go bankrupt again, that's when you buy GE.
Is that when you pick up GE shares? Yeah, maybe. If they get a bailout, that would be one of the ways they could generate some revenue. They're having a hard time outside of that.
The only way they did it in the last 10 years.
Good hell. All right. Anyway, that stock is down here big today. AMD also taking it on the chin, Matt. We had a breakout at 20. It's now failed there, down 8.5%. Chip makers in general are showing a lot of weakness. Now, the thing about AMD, an 8% move is kind of par for the course with this stock, which is crazy to think about.
Very normal for AMD. If you are a faint of heart, you should. If you cry at Disney films, you should not trade AMD. That's just how it is. I'm still in my trade from last week. I'm not too concerned about it, to be perfectly honest with you. The trade that was setting up that did not manifest itself so far today, and we had it on the options report, was the trade that was kissing off the $20. 20-point range here. Never really confirmed here today, but like I said, the trade from last week, I'm not too concerned about.
Yeah, let's go on to the Dow Jones or the NASDAQ. Probably the Dow next. It's been the strongest. We might want to start leading with the Dow.
Man, it's deserved to get its ranking up.
Now, this one's a very interesting technical pattern, Matt, because you had put in a higher pivot high, but you haven't confirmed a higher pivot low yet. So the trend definitions are all over the place, quite frankly. You could call that a mess.
Well, it is a mess, but Tim, you do have a technical higher high. You have not formed a higher low yet, simply because the future has not happened yet.
Mm-hmm.
Yeah, the market looks ugly in the last 2 days. But if you look at this from a retracement perspective, that's coming down into 25,500. That's coming down into now a rising 20-day moving average. So I haven't bought the Dow because I haven't seen a clear entry here. But if you do get some degree of retracement and it slows down somewhere between the 20-period moving average or even all the way down here to 25,000 or the 200-day moving average, Tim, that will be your cleanest buy signal that this market has had in over a month and a half.
Mm-hmm.
So yeah, it's messy today and it's ugly today because the market's selling today and it has not found support today. But don't be shocked if the market does find support somewhere this week and present a fairly significant buying opportunity. Now, a lot of this rests on support holding. Would you agree? Obviously,
it has to have a confirmed support point here. There's no question about it. But I mean, that could be that 25,000 mark. We don't know where it's going to come in. It would be logical for it to come down and test 2,500 or 25,000.
Let me show you the zone of support on the Dow right now. That's the zone of support.
Yeah.
I want to give you a clearer picture, but that's where support could form. You have 25,000 over here as an old resistance level. You have your 20-day moving average. You have your 200-day moving average, and then you have that very important 25,000 mark. So yeah, I mean, it's a big zone, but that's where I'm looking for it to slow down. Anywhere in this zone, and you know what? When it starts to slow down and we get that upward movement in price, you better be here on the halftime report because I think it's going to be a great buying opportunity.
Yeah, I really do like the Dow lately. One great ETF for the Dow, DIA. If you don't trade the futures or the indexes, you can always use that ETF. The Diamond product, obviously a very popular one. Top gainers on the NASDAQ, Matt. You tell me if this tells you anything. Procter & Gamble, Verizon, Coca-Cola, and Johnson & Johnson. They're the only ones with a green tick here today. Obviously, defensive names.
Safety, all that, yeah.
Top losers, though, Goldman Sachs, Apple, Visa, Boeing, and Intel. Give me a chart on Goldman, down 6.5%. Of note, obviously a big financial name. It was showing some strength in some ways. It was trying to hold up there, Matt, but obviously the last 2 days just absolutely taking it on the chin here. What is going on with Goldman today?
It's Goldman.
Yeah.
That's it. It's a bank stock who rips people off. People found out about it. No, I kid, obviously. There's just extreme bearish weakness here, Tim. Just extreme bearish weakness. I haven't seen a clear buying opportunity on Goldman Sachs. And I'm going to try to remove my internal bias from this because I never see a buy signal on Goldman Sachs. But I haven't seen a clear buy signal on Goldman Sachs in 2018, Tim. Mm-hmm. Maybe you bought the breakout there on the 24th. But outside of that, I haven't seen that. It's been bearish, and it's getting its ass handed to it today. It's breaking major support levels here at here. And you never want to chase this, Tim. That's so hard to chase. I mean, it's down a good 22 points in the last 2 days. But in terms of that overall weakness, the level that it's breaking out of right here, Tim, that is a major area of support right there, right around, I'd say 210 is kind of that area of support. And if it does break down off that 210 mark, Tim, you could see this stock get just absolutely pummeled.
Mm-hmm. Goldman shares head for the worst drop since 2016 as Malaysia seeks refunds on a doomed deal. That is not a good sign. Oh my, I was in Malaysia last year, Matt, about it actually to the date. 6% tumble puts investment risk. Yeah. Some of them, here's the thing, and a headline like that, I'm going to have to dig into this a lot more, obviously, here this morning. But a headline like that is the kind of thing you hear when we are moving into bear markets. I'm just going to call that like it is. It's when you hear ancillary stories of some bond deal or debt deal or, derivative deal that unwound because the emerging markets were volatile or something like that. That's a terrible headline, in my opinion. I got to dig into this one a little bit more.
That headline's far worse than the Apple headline.
I agree with that. Obviously, Goldman Sachs taking it on the chin is one thing that I like to do. And here's a tip for all of our halftime crew. If you see something in one area of the market, you want to find other companies that might fit the same kind of thing. Goldman Sachs, your Morgan Stanley's, Matt, also selling off here today, playing catch up. E-Trade, Schwab, Ameritrade, all the brokers are also selling.
Well, what do we have? We had about 3 or 4 of those banks on the bearish list last week.
Yeah,
coming
yeah.
in on the account report.
I'm seeing good signals for bears out of Ameritrade, E-Trade, and Schwab here today as well. Weakness across financials, guys, could create some opportunity here, obviously, with that. Dow Jones Industrial, I'm looking at every 30 chart here, Matt. I don't see a lot of strength, quite frankly. I see neutral in some regards. Mm-hmm. Boeing down 2.5%, Chevron down 1%, Goldman getting killed, IBM looking terrible. IBM, give me
another stock from the options report this week.
Mm-hmm. IBM's a perfect bear pivot trigger here this morning. Option report from Tackle Trading as well. Intel hitting resistance coming off the high. The only strength you're getting is out of the conservative areas. We'll break those down when we break the sectors down as well. Interesting. I mean, this is why you do thorough market research.
You're right. And in our scoreboard, we had the market ranked at the S&P at I think -45. A lot of those aggressive sectors in that -25 to -35 range. We'll go over that here in just 1 second. But here's the thing, Tim. Don't be shocked if on Wednesday you find some support and that creates a buying opportunity. And the charts that in the individual components might not signal that, but the index would. So again, I get the negativity today. I get the negative headlines today. I get the markets down today, but there's nothing really that is unexpected here, right? I mean, coming into the week, we were bearish, on the overall market play. Well, I'd say neutral to slightly bearish, but in our rankings, most of our sectors were on that negative side of the equation and that slightly bearish. And the simple reality was you were overextended coming into the weekend. You were showing profit taking on Friday, and the market is simply responding off resistance, coming back down into support. So yeah, the headlines are going to be nasty today, but this is not something that anybody that comes to the halftime crew was unaware of or should be shocked at. This was an expected price movement.
Yeah, I agree. And I'm seeing weakness across all indexes. Let's go on to the NASDAQ, where you're actually seeing a lot more pressure than even on the Dow and the S&P. NQ, oh, man, I mean, you've got some pretty nasty stock movement here.
Yeah.
Align, NVIDIA, Broadcom, Insight, Workday, all down 4, 5, 6%. You do have some strength in a few. American Airlines looking good. Win is coming back in JD.com. But in general, we have a lot of pressure. On the NASDAQ 100, 90 of the 100 companies are down today. So 90% of the market is seeing selling pressure. From a chart perspective, and it's very subtle, Matt, but that is now breaking below that little mini tiny pivot. We had a little consolidation. I don't know if I'd call it a pivot on the daily. Intraday, it will look worse. You're breaking down below levels. You're down below moving averages again. And that's 3 red candles in a row where you've given up all of those post-election gains, okay? The election came out, you had the rally, and then boom, here we are all the way back down the chart. Most bearish for me, maybe Russell. I think you could debate it, but what's your read on the NASDAQ?
I think we ended our week last week with the I think it was the Dow 1, S&P 2, NASDAQ 3, Russell 4, and there's nothing that we're seeing today that would come off that type of ranking, Tim. The difference, and here's the subtle differences when you're looking at these indexes, guys, and they are subtle differences, but they are important. When you're looking at the YM contract on the Dow Jones, you're seeing a resistance level that has increased in the short term, right? And for some reason, it's not wanting to pull up. When you're looking at the S&P 500 chart, and again, it's not wanting to play ball here. So let me try the diamonds. Oh, it's just not wanting to play ball at all. But when you're looking at the S&P 500 chart, okay, resistance levels. The Dow hit resistance here. The S&P hit resistance here. The NASDAQ hit it here. And the Russell 2000 hit it here. So it's an easy ranking when you have a lower high.
Yeah, you can try the market skyline page, see if the data and Thinkorswim just stalling on you if you want. We can try the charts over there and scroll back up. Here we are. Yeah, we're getting data here at least. So good thing to have 2 sources, obviously. You can get charts a lot of different places. The NQ is showing weakness. You're seeing pressure across many of the FANG stocks, Matt. Facebook, Apple, Amazon, Netflix, Google, a lot of them showing weakness here today. We talked about Apple already. Cody had mentioned that it was the news on, that distributor slashing some of their guidance. I don't think that's just it. I think Apple was posed to sell, quite frankly, throughout a lot of that. Do we got charts here at TOS?
Yeah.
Apple now fighting the 200 MA. After it missed earnings, I had a mental picture in my head where it was going to come down into the mid to low 190s and try to test. Obviously got some weakness here.
Well, yeah, but again, gun to head, Tim. Would you buy this?
No.
What would have to happen for you to buy it?
Oh, as an investment, it would probably be a couple of weeks and see the market go back into a Christmas rally, and then I could do something. It would be market related, not Apple related. As a trader, I would need to see enough market strength and stability out of tech to believe in the upside. You don't have a swing trade here except counter trend. It would be a couple of weeks before it even consolidated. I mean, you could do things. There are reasonable approaches where you can get more advanced and try to craft something complicated. But the reality is you want simple trades. That's it. Under pressure, it's coming down. How many times did we see it over the last few months, Matt, where tech sold into the 200, traders rushed in early to catch a little bounce, and then it sold right underneath the 200. We saw that pattern across many of these tech companies as they were seeing pressure. In my opinion, Apple's just playing catch up here. The rest of the market already sold off in tech, and now it's coming around and kind of getting it as well.
Well, Apple is one of the reasons why the market was being held up. Apple's, obviously selling, Amazon selling, Google selling. They're all selling. They're all coming right back down. I'm a little more bullish on Apple than you are, I would suppose. I mean, Apple does have evidence at the 200-day moving average. And no, there is no swing trade here, Tim. And yes, you would want to wait for some degree of confirmation, slowing down impact. But there is a lot of evidence that Apple does respond well off that 200-day moving average.
Yeah. Some people would buy it. I would not buy it on a day where you're down 4.3%, obviously.
Of course not.
Yeah.
Of course not. Slow the roll, right? But
that's right. You have to slow that roll just a little bit. I'm looking at so many of these patterns, Matt. I'll just give you an idea of what I'm seeing in the NASDAQ and whether they're tradable pivots or not. These are all bear retracement pivots. Give me a quick, 5 or 6 charts. Just give you an idea what I'm seeing. Dish, number one. NASDAQ component, bear rally, retracing, little doji candle, right? Yeah. eBay on one of the reports this weekend. eBay, absolutely beautiful, bear rally, bear retracement. Now you're getting some confirmation candle.
Yeah, you could say that's confirmation, no doubt about that. And I don't know exactly what we put it on, but it could also break that 29 barrier, and that would be confirmation. But that's certainly rolling over, yeah.
E-Trade, ETFC. We talked about many of these brokers, same pattern over and over and over again. Now, this one rallied further into that channel, but now you've got 2 red candles off of the bearish retracement.
Yeah, but let me point out something on the bank, and I don't want to come across as the bullish guy on the bank, but let me point something across. Can't you see in the future a reversal pattern happening here?
Yeah, down to 50. If it pulled back and then you develop a new pattern.
You pivot down to 50 and you come back up, forming another head and shoulders. So, yes, there is overall weakness. The market was extended coming into the weekend. I expect the market to pull back into those support levels, but by no means is this the end of the world type situation that some of those headlines might represent. A lot of the market was overextended. It needed to come back down into those support levels. Keep an eye on the market over the next 2 days. If it does slow down, especially on the S&P and the Dow Jones, if it does slow down, there's going to be some buying opportunity there. Yes. Am I overall in my portfolio? Do I have more bearish trades than bullish trades this week? Absolutely, 100%.
No, I'm leaning there as well. And obviously, we as a trader, we adjust day by day as new information comes in. It's just you're waking up here this morning, you're looking at these moves, and obviously you're seeing bearish activity. There's no question about it. And by the way, are we at an end of the world situation? Well, you did have the Tennessee Titans beat Tom Brady, and the Bills got a win over the weekend. So maybe, I don't know, topsy-turvy NFL weekend in that. How'd the Dolphins do? They win?
We don't need to talk about the Dolphins.
Keep that one off. All right. Guys, as I'm looking through all the markets, and Matt, last index before we move into dollar and commodities is the RTY. There are some opportunities that will set up to the upside. There's no question about it. On our bull list and our bear list over the stock and option reports, Matt, for tackle trading, we had even numbers that we ended up, approving for our coaches for the week.
I think on the options, there was like 11 or 12 bull and about 15 bear.
Yeah. Yeah. And you got to be prepped for both directions. But in aggressive areas like technology and international stocks, as well as small caps, we're seeing significant weakness this last 3 trading days, including today. RTY at 1534. It's kind of in no man's land here, Matt, from a technical perspective, but you have a developing head and shoulder potential. It
Well,
would
and
take a lot to get there, but map it
again,
out for me.
but that's exactly what I'm seeing here. And that's why I'm not doomsday right now, because yes, the last 2 days sold off and they sold off pretty good. But the reality again is the same thing. You were overextended coming into the weekend. And if the market would have responded bullish today, Tim, what would we have been saying? Well, yeah, it's really good for investors, but that's a tough trigger for a swing trader. What I'm seeing is some great bearish swing trades setting up, and later on in the week, some really good bullish swing trades setting up. You gotta like a couple different factors. Number one, it is responding intraday, Tim, especially on the Russell 2000. So if you look at this, it did respond intraday, came right back up into those resistance channels. Now, I wouldn't buy this, Tim, but if you broke out of 1540 on the intraday, that's a tradable buy signal from a day trader's perspective. Would you agree?
Yeah, of course. I mean,
Okay.
you have, V-shaped bottom there.
It's V-shaped bottom. So you are seeing some intraday price movements that is coming back up as we speak, because I do think it's a little bit of an overreaction. But now that you're coming back down, you're hitting some important support levels on the Dow and on the S&P. Not so much on the Russell 2000. That the Russell 2000 intraday movement was not off a strong intraday support channel. It was more Dow and S&P related. The Russell's just kind of getting pulled up just due to the overall market intraday strength coming back up over the last hour or so. So, again, patience, caution, and all that jazz, but nothing has happened in the last 2 days that was not 100% expected. The headline might be different, but it was not unexpected in any capacity. Watch how that market responds off that support levels. If the market breaks support, then yeah, we'll get real bearish, and we'll get real bearish fast, right?
Sure.
But the simple reality is there is still strength in the marketplace. It's not the end of the world scenario. Watch the market form support, especially on the YM and on the S&P 500.
But it does come back to Delta, Gamma, Theta, Vega. You've got to pick your edge, right? And out of all the different things you can trade in the market right now,
Easy.
Bearish Delta seems
no. It's okay. If you want to go all geek on me, okay, I'll go geek with you. Okay, negative delta, positive theta, that type. And when I mean negative delta, it should be a very slight negative delta right now. Okay. Positive theta, slight negative delta. That's the way you should go about this week so far, and maybe adjust that over the next 2 days to more neutral delta, positive theta. But yes, I am slightly bearish coming into the week, but Tim, I'm not bearish overall yet.
I would also add, I think short volatility, short Vega seems to be a legitimate way to play November. You're out of post-earnings season, Matt. We've talked about the volatility fade through this time of year. There's a lot of different ways you can approach the market, guys.
Well,
and I think that's
data, you should be negative Vega.
Most likely, yeah, unless you're doing some kind of time spreads or whatever. Yeah. But yeah, credit spreads, all that kind of thing, short Vega. I mean, the VIX is at 20. Give me the volatility index. At least on a Monday, give me the volatility index, and we can take a peek at it.
I think you and Tyler had your volatility fun last week.
we talked about it on Monday. We did.
You and Tyler, you had enough of your volatility fun.
Oh, come on. There we are. The VIX at 20, I'm not worried about the pattern. It doesn't trade technically like other products trade, Matt. The VIX at 20, I think, is relatively higher than it's been for a couple years. 20% implied volatility is not extreme or anything like that, but you can get some good credits in this market. All right. Now, if we could play this game, young man. We could play this chicken game. Waiting for you.
What do you want me to say? Market's down. You get higher on your premium in the options market. Fantastic. Moving on.
Well, I do think that individual companies, I am seeing extreme volatility in some areas because of all the craziness. So there are some short volatility plays. Let's go down to the commodity and dollars. Dollars first, actually, dollar index, Matt. You did the Forex report over the weekend. Wonderful job, by the way. If you've not seen the Forex report, guys, go check that one out. It breaks down lot sizes and all that kind of stuff.
There's a reason you need to watch it on Saturday or Sunday for the market open, not Monday, Tim, but Sunday night. My entire report was on the euro dollar and the dollar breaking out, and it did it.
Well, explain that to me.
Tim, the news of the day is not the S&P down 1.5% or Apple down 4%. The news of the day is the dollar breaking 97.
Mm-hmm.
That's the news of the day.
Yeah, I agree. And, there's a lot going on in those Forex markets. There's no doubt about it. When the dollar is strengthening like this, on the backs of the assumptions the Fed's going to keep raising rates. And so the market just kind of accepted that from last week's non-decision, but also, firm tone and whatnot. Dollar is showing a ton of strength. I also saw some weak headlines in Britain, further problems.
Brexit, European debt, Italian budget woes, all that jazz, whatever. This was a technical break of 97 and everybody was ready to buy it on top of it.
So back this out to a weekly, because that looks like just another little breakout we've run, guys. But we're seeing significant higher highs that we've not been at, Matt, since like early 2017.
About 16 months.
Yeah. So significant strength. Dollar's currently just in a very clear uptrend. You're probably, what yard line we have the UUP at this week? 40, something like that.
No. I did it in the report. I put it at the positive 30-yard line, Tim. So let me show it to you very quickly, because I think it is important to explain one simple factor of why I put it where I did. And it was basically, I said this, Tim. I said, I have the dollar at the 30-yard mark right now simply because it has not broke out yet. But if it breaks out, it goes up into the bull area, right? So that was basically the analysis was, if the dollar breaks out, you go right on the dollar and you go left on the euro, basically, and the euro and the pound. And then basically in the Forex report, I did a write-up of, okay, now here's, some basics in the Forex market. Halftime crew, that was for you guys, mind you. But I wrote about kind of the basics of trading currency, lot sizes, leverage, pips, so on and so forth. But then when I did, and so I laid out the groundwork, the definitions and all that, Tim. But then I basically taught how this all works in a trade on the euro dollar pair. And so I basically used my stop loss rules, my entry rules, my target rules, laid them out there, and then through a series of, okay, now this is how you analyze prepping that trade, and basically just showed them everything what you do there. And then I said, okay, now taking what we just learned from a definitional perspective, look at how the numbers look on a micro lot, a mini lot, and a standard lot type situation. And so that's kind of what I did there. And when you're looking at the euro dollar pair, okay, let's take that off that weekly chart. When you're looking at that euro dollar pair, okay, this is kind of my screenshots that I had in the report, Tim.
Mm-hmm.
This is one day after that report got released. Timing is everything, guys.
And in the Forex market, it's important to note that Sunday night in the U.S., where you and I live, obviously, Mountain Time here in Utah,
about 5.
Markets already open in Asia. You have the Australian Bank Open, which usually opens up the market on a Sunday afternoon. And so if you're trading Forex, you can get triggers on Sunday night.
I don't know which Forex report I did it, but it was in the last 6 weeks where I talked about the 24-hour cycle. And for us traders, guys, the market doesn't open up Monday. It opens up Sunday night.
Mm-hmm. Give me the pound dollar cross pair. I did see further information about Brexit. We're going to have to get, some people on to do a podcast about this whole Brexit thing being messed up for years now, Matt. If I see a positive headline about some kind of Brexit deal, I'd be shocked at this point. It seems like it's unraveling, unwinding, selling off. One of the weakest pairs here today. What's going on with the pound dollar?
Well, two things. Okay. And I know the headlines are out there. But Tim, haven't those headlines been out there for 2 years?
Mm-hmm.
Okay.
Yeah.
Right. Okay. So the headline today is euro weakness on Italian budget crisis, okay, and pound weakness on name your headline why Brexit is not efficient, right? And it's the Scottish border situation and so on and so forth. Theresa May has not done a good job in handling any of this. Okay, that's number one. Number two, it's not just the headline. You had selling weakness coming into Thursday, coming into Friday, and on Friday, and I said this in the report, and I said it in the halftime report on Friday as well, the breaking under 130 is significant to me, okay? That is a significant technical barrier in my opinion, and when it broke underneath that level on Friday, coupled with the slight degree of negative name your headline here, you saw extreme weakness coming into it. But again, you had that weakness coming in before the headline. And that's what frustrates me sometimes about these headlines. Oh, pound down due to this, euro down due to this. And it's like, no, that is not why it's down. It is down because of the weakness coming into the weekend, because you broke 130 on the downside on Friday, and you had a slight negative headline that drove that even down even further. So it's almost like what comes first, right? The chicken or the egg, the cart or the horse, all that jazz. But if you're not into this trade, it's already done. You can't chase this trade because you're coming now close to a fairly close target there at about 127.
Yeah, moving on to commodities. Obviously, when the U.S. dollar's rallying the way it is, you're probably going to see some commodity pressure. Actually, the grains have broken out here. Wheat is up like crazy. We didn't expect that this soon, but actually some of the agricultural commodities are going up. But then you do have weakness in other areas. Platinum down big, silver taking it right on the chin here. Let's break down all the different commodities here, Matt.
Okay.
Let's start with some of the
platinum's down, but Tim, you doji tomorrow. And again, I'm not calling for that. I'm just saying if you doji tomorrow, upward movement in price, isn't that a really good technical signal?
Well, and that's what we talked about in the commodity report. I had mentioned that we had a bias that was positive on this one, but it wasn't tradable yet because we needed to get a pullback pivot trigger, right?
So basically what you needed was exactly what happened today, right? Now, you're not going to buy it today, right?
No.
Okay, but if it does doji upward movement in price on, say, Wednesday or Thursday, at that point, that's a tradable buy, right?
Yeah, I do like that reversal pattern, higher highs, higher lows. Yeah.
Okay, what about, so that's on PL. What about PA? That's a developing cup and handle.
Well, it does have obviously an uptrend. You are above moving averages. You're in a compression up there. It needs to break out, most likely, like you talked about, cup and handle pattern.
It's an easy call. You don't touch it until it breaks it.
Sure. Yep. Yeah. Platinum, palladium, they're both looking okay. Copper.
I think we should trademark that. You don't trade it until it breaks it. I think we should trademark that. Get that on Twitter, Cody.
I like it. Don't trade it until it breaks it.
Don't trade it until you break it.
But then you look at the other commodities. Silver's down 3.5%, Matt.
It's not just the 3.5%. It's testing a major important support level of 14. Okay. You break that 14 barrier. You got some around 360, but that 14 barrier, that's pretty important. That's about like it was when it broke out of this 16 barrier. So yeah, it's, we want the shiny little metal to do well. We care about the shiny new metal, the smaller metal, the little brother. We care about silver, but it's in a very important support zone.
Well, what's interesting about that move, usually silver and gold will move together. They are correlated, obviously. Gold is only down 3 points, down 1/3%, where silver's down 3.5. It's breaking down here, and gold has more downside, but the actual pressure in silver, you're right at that psychological level at 14. Now, Pete Thomas talked about it on our podcast. He would be buying with both hands at these levels.
He would be buying physical, right? Yeah. He would be buying physical at 14. He wouldn't be buying paper at 14. No, there is a vast difference in buying physical silver at 14 and paper at 14.
Sure.
You can't buy paper at 14. Heavens no.
Metals definitely under pressure here today. Grains and agriculture a little bit up, but the energy also up, Matt, making a little bit of a relief rally here. Brent oil up 0.8%. One of the headlines I saw was that Saudi Arabia was going to cut oil production, and I expected some big candle on crude oil. It's not even a green candle anymore. What's going on?
Not even Saudi Arabia cutting production. And also, mind you, they're cutting 500,000 barrels, right? So that's the headline, that Saud is cutting 500,000 barrels in their daily production, right? Now, I believe that puts them, I don't know for sure exactly how many million barrels that puts them at. But they also, and the reason they said that is because of limited demand worldwide coming into December, right?
Mm-hmm.
And they also signaled that OPEC may need to cut 1 million barrels per day in daily production to offset the pain of the last couple of weeks. I mean, Tim, from the highs down to the lows, I mean, oil is getting just absolutely just crushed. I mean, we're talking about from the highs to the lows in slightly over a month, down over 20%, Tim. Oil only does that when there is extreme bearish pressure on it, right? Extreme bearish pressure, 2014 type bearish pressure. But not even that headline today could cause a green candle to happen. You had a gap up at the futures open overnight. It dojied in the morning, and then intraday it's been selling, Tim. And if Saudi cutting oil production and OPEC cutting oil production cannot lift oil, wow.
I want to get your take on some thinking that I've heard, people I respect and trust, and I know them well as traders, investors. Usually when they have an opinion, I listen to it, but I think it can be dangerous. I've heard, well, oil's down 10 days in a row. It's never been down this many days in a row. We've got to get a relief rally.
That sounds like somebody who says, you know what? Let's go play blackjack. We're going to start with $50. We're going to double our bet for 7 straight. I mean, what's the odds of that actually happening?
Yeah.
That's dangerous psychology and dangerous mindset when it comes to trading.
I agree with that. At $60 on crude oil, Matt, I've got a 65-55 range, in my opinion, because I broke down that commodity quite a bit over the weekend, analyzing it, trying to understand where we are, where we could go. If you back that out to a weekly chart, what you're going to see is old support at 65. You could easily get a bear retracement up into there, right? Or $55, because I don't really see 60 as a floor. I was trying to make a case that 60 should be the floor. And I know there have been other points there, but with the pressure that it is right now, and the fact that, I mean, you tell me if 55 or 60 is a more likely floor here.
Well, I mean, you do have a little evidence over here that it tested 60. Couldn't get back up above it, but it did consolidate there at 60 for quite a long time there in 2015, Tim. It acted as a little bit of a support here. And Tim, if you'll remember back in last year, November, we were talking in our coaches shows and whatnot about a potential breakout of 60. So 60 does have some degree of evidence in playing support and so on and so forth. But when you're talking about a move like this to the downside, Tim, okay, you're talking about a big movement to the downside, breaking major areas of support. That's an M formation type signal, Tim. You get any relief coming back into 64 will be met with strong resistance between 64 and 66, which could lead to some type of kiss of death formation. No, I'm not buying oil after 10 straight days down just because it doesn't do it normally. That is faulty logic. This is the thing that's been absolutely crushed. It gets crushed in recessions, and I'm seeing global weakness out there in the marketplace. So no, you can't touch this at 60.
Now, this has only been 6 weeks, right? A very, very severe downward pressure in selling. Percentage-wise, from 76.9 down to what was the low it hit yesterday, from tip to tip here, Matt, we're about a $17 sell-off, right?
Yep.
$17 on a $77 product is
22%.
22%. Are we approaching bear market territory here for crude oil?
Okay. We can have opinions, and nobody knows what the future has. But when something goes down 20%, that's a bear market.
Okay. So a 20% sell-off is a bear market.
Unless we want to change the textbook definition of what a bear market is.
I don't. So if we are moving into a bear market, what makes us think that this is going to recover and turn back into some kind of an uptrend?
Because Tim, if it rallies into 64, 65, or 66, I would have a short on it. And so would a lot of other people in the market.
Yeah. We will be coming back, obviously, to this commodity, number one commodity in the world. So many different trading opportunities and ideas on it. I know a lot of people who are thinking it's oversold, and it is by definition also oversold. I mean, every
Yes.
indicator that measures those oscillators, you are oversold. A lot of traders are going way deep
Okay.
out of the
So Tim,
money, selling
that's a
naked
very
puts.
yes, and that's a different strategy though, right? I
Mhm.
have deep out of the money naked puts on oil right now, like $45 that expire in like 20 days. And Tim, I put that on like what was it, 4 days ago? Something
Mhm.
like that. I'm already thinking about taking that off. And Tim, not at a loss.
No, no, I
Time
believe you can
time is
sell. That's
time has already done it.
volatility.
But yeah, but that's only if you understand volatility and delta and probability and trade management, all that jazz. But if you're talking about a directional buy here, no. Yeah, could I see a scenario where this week oil finds that support at 60 and rallies into 64? Oh, absolutely. In fact, I would say that's probably a slight probable outcome here. Okay.
Yeah.
And when I say slight probable, I'd put it somewhere around maybe 52%. So yes, it's overextended. You might have some short-term relief that, in terms of Saudi Arabia or OPEC doing something, it might help it in the short term. But Tim, if you're looking at this and you're tracking this the same way we did, and I like to look at history as a barometer, obviously, but I'm going to go look at some history here, Tim. If you're looking about oil, ladies and gentlemen, that's what oil can do in a bearish downtrend. Okay.
Hmm.
So Tim, if you're looking at this in the similar light that we were looking at oil today, look what was happening in 2014. Okay. Oil had its rallies, oil had its bases, oil had its, support rallies into the decreasing 20-day moving average. But then what was it always met with? Extremely strong resistance and selling pressure until ultimately oil succumbed all the way down to $27, $26 a barrel before it started recovering. And what was happening back then, Tim? You were seeing weakness in your emerging markets. You were seeing weakness in your emerging market currencies. You were seeing weakness in not Italy this time. You were seeing weakness in Greece at that moment. You were seeing weakness internationally from an economic perspective, and you saw Saudi Arabia start basically saying, well, we're going to raise production on our oil because we want to decrease the price of oil, and then a global recession slightly hits them in the face. So you're seeing similar type of techniques right now that are happening. You're seeing everybody warn against global demand decreasing in 2019 and in 2020, and not even Saudi Arabia coming off and saying we're going to cut production to stop this pain train. So I'm not going to be the one to say, hey, let's buy it at 60 and just, throw caution to the wind and let's rock and roll here.
It's got to go back up. Everybody buy. No.
Every time it hits 60, it goes to 70.
60% of the time it hits 60, it goes
It
back up to
goes
66. Yeah.
160 times. I mean, no, it's extremely weak. Look for a short-time rally to be met with extreme selling pressure.
One area, obviously, though, that has been really strong has been natural gas. Just another incredible candle here, Matt. It's not going to get a big headline from the actual percentage, but the fact that it is up here again today and it hit a top there on that tail, you are just seeing this blast out rally. Could be short covering, could be the markets have to readjust, but it might just be going into some kind of parabolic uptrend. Beautiful run here in natural gas, overextended. Not exactly an entry point, but just wanted to make note of it.
Could be the fires as well.
No,
Tight supply.
yeah, it's definitely fire related. There's no doubt about that. Great point, Cody. I've missed out on this, Tim. Like you've been more bullish on it than anybody I've known ever since it started breaking out of $3 right here.
Mm-hmm.
But I mean, what do? It's just, where's your entry signals?
Well, you don't have one. You trade based on what your training is. You trade when you have an entry point, you trade when you have probability, and you don't touch it otherwise. We don't chase on emotions. Part of what we do as traders on a day-to-day basis is we break the markets down one component at a time so that we can naturally find the best opportunities, Matt. Natural gas is not where you get your money in right now, in my opinion, right? I see an overextended run. If you were in it and you were long, congratulations, you caught a nice move. There could be some counter trend things to do, but many traders have been burnt trying to counter trend trade at all. So that would open a huge debate. You just trade what you see when it's simple, right? There's too many good signals across the market, like that euro dollar, triggering and selling. You don't try to chase complicated patterns.
Listen, if you've held through all this volatility on natural gas as a long-term investor over the last 3 years of its 33% up, 33% down behavior, congratulations to you for having the fortitude that I don't have. But outside of that, I don't as a trader here, I don't see any entry here.
Yeah, we are at way past the halftime point.
Point, buddy.
But we are here hanging out with you guys on YouTube, and a lot to talk about here on a Monday. Obviously, Monday, you have to do that thorough preparation and deep dive into all the different areas. With our last 10, 15 minutes, Matt, I do want to go through the sectors and also look at the economic calendar for the week and kind of talk about where we are in that perspective. Start with either one of those two things, and let's start breaking down those other components.
Yeah, and what we're looking at here is just what we call our market scoreboard. And basically, as you can see, the more left it gets, the more bearish we are, the more right it gets, the more bullish we are, so on and so forth. Communications, we ranked as extreme negative. Industrials, energy, financial, all in that slightly bearish category to bearish category. Technology, basic materials, both in that slightly bearish to category as well. Most of the sectors we had on the bull side, we had as a slight bull to neutrality, except consumer cyclical, where XLP, the staple sector, which we had in the bullish behavior there. If you look at them from a charting perspective, here's XLP here, Tim. We had this one as slightly bullish coming into the market, even though it was overextended. And the reason we had it slightly bullish, even though it was overextended, Tim, was simply because of the degree of negativity we saw out there with a lot of the market at resistance levels. We did see the market coming back down this week, but at the end of the day, even though Staples was overextended, it has a lot of those safe haven type plays that we talk about, and it's actually responded okay today, really kind of just neutral. But if you look at say communications here, Tim. Okay, communications we had in the bearish -2 territory, just getting it absolutely hammered today. And I'll just kind of break these down one by one. Consumer discretionary was basically overextended. This looks very similar to what we talked about with the Dow Jones Industrial when we're looking at the YM. So I like the fact that it set a higher pivot high on discretionary. I like the fact that it's also selling off, coming back down, because it's going to find some support here that will give us a better, cleaner trigger to get back into some type of place in the discretionary sector. Technology, overall weakness, we had it ranked right here in this slightly bearish to neutral capacity. I'm seeing, I was a little bit more bearish than others in that meeting, Tim. I do see a lower pivot low. That gives me a little bit of pause for concern. And obviously it's getting its tail handed to it. Look for it to have support around $67. Industrials, the industrial sector is getting really kind of beat up here. And that's what we're seeing in the Dow Jones. Some people get a little confused between the industrial sector and the Dow Jones. The Dow Jones used to be the only industrial sector, right? It was the Dow Jones Industrials because all those 30 stocks in the 1930s and 40s and 50s and 60s and 70s and whatnot, they were all industrial components. But now the Dow Jones is not just industrial components. Tim, Apple is listed in the Dow Jones. Some of your banking stocks are listed in the Dow Jones. And so when you're just looking at the Dow is not going to be as reflective on the industrial sector than if you're just looking at the industrial components, which is what we're seeing in XLI. I'm seeing a really a bearish situation coming here on the industrial sector itself. Look at the lower pivot highs, look at the lower pivot lows, and look where this retracement came back into, right at that 73 barrier on the industrial stocks. I look for some of those to have selling pressure this week. Basic materials, we had more as a slight bearish neutral rating. Same type of situation on materials is happening that is also happening on discretionary. So if you look at discretionary here, it did set a higher pivot high, and now it's trying to form what's called a bullish retracement. But Tim, if you look at materials here, okay, and this is a sector that I'm starting to get a little bit anxious from a bull perspective. It sets a higher pivot high, and now it's retracing back down into the breakout channel. That is one of the more clearer technical patterns that I'm seeing in the market that is starting to form, and that would be very important for that market to form support somewhere between 53.5 and 54.5 on the basic materials sector. So keep an eye on that. If this puppy does form a retracement, does pivot back up, there's going to be a lot of good opportunity this week in the materials sector. Energy showing overall extreme weakness, in my opinion. Consumer staples we already talked about. Healthcare, we had healthcare, I want to say, in that slightly bullish capacity to neutral, and that's just because a lot of the strength we're seeing here, it is overextended. This looks very similar to what we're seeing on the S&P, where it came smack back dab into that resistance levels. I look for this to retrace back down into that 90 to 91 area before you might see some degree of support there. XLU, utilities and safety, obviously it's very volatile lately. In fact, from a high to the low perspective, utilities have been extremely volatile in comparison to some of those other candles, but this looks very strong. We had utilities ranked right in that slightly bullish to bullish category, and that's because of some of the overall weakness we projected in the market. So some of those ETFs that you see as more safe haven plays, consumer staples, healthcare, utilities. A lot of those were some of our higher rankings just simply because of the overall weakness in the overall marketplace. Financial, we've talked enough about, but again, look for that to find some support between 26.25 and really kind of this 26.50. You got to like financial to a certain extent. It did form a higher pivot high. Now it's forming a little bit of a bullish retracement. Real estate we had ranked in that slightly bullish versus neutral capacity. And it's, I've missed out on that breakout. I'm not in anything here, but you see it coming up into these resistance channels up around 33.50. That is a support resistance level for this ETF. So keep an eye on that one. And then we already talked about, the communication sector down 1.34%. And we had it as a bearish red zone type play.
A lot of mixed information in the sectors, and Matt, the breakdown is aggressive defensive in so many regards. Obviously, utility staples we had a little bit stronger, healthcare because of the recent strength, but the weakness has been across the board in those other areas. I do think your eye on XLB is fascinating because that is one that you could start to get excited about because it had put in the higher pivot. So
it's not only that though. It's got XLB has seasonality in it. Okay. Mm-hmm. In November and December, over the last 20 years, XLB is one of the best performing areas of the market, Tim. Mm-hmm. So yes, it has shown weakness today and yesterday, and it's coming back down into the support. But keep an eye on that. Keep an eye on that 53.5 to 54.5 level, because if we pivot and start running, we might see a Santa Claus rally in materials that the rest of the market components don't actually happen.
Sure. Economic calendar is pretty light in general for volatility expectations, but inflation, CPI number on Wednesday, Matt, that's usually a very important one. We saw inflation move the market last week, retail sales on Thursday. Then you have chair testimony, nothing really today or tomorrow, but we do ramp up middle of the week this week.
Yeah, it's inflation week, CPI. CPI is the most important inflationary indicator, so you definitely want to keep your eye on that. That's going to be important for the market from a variety of perspectives. Number one, it's important to understand what the inflation is in general as a U.S. consumer. That's number one. Number two, we have been seeing some degree of data of rising inflation above the Fed projection targets. And if we see that continue to happen, Tim, I'm going to start getting a little concerned about inflation in the U.S., not to the degree that Venezuela or others get concerned about inflation like Turkey, but it has been upticking recently above those projections. And Tim, one of my biggest concerns over the last 10 years is inflation is a lagging indicator, and the Fed has printed a tremendous amount of money and the U.S. government has increased our deficit to such an extreme levels that inflation has to come back on us at some point. So that's something I've been concerned with. And if we do see that trend continue, you can put a guaranteed J-Powell's raising in December and probably another 3 to 4 times next year. So it's going to have important economic factors for not only us as consumers, but us understanding where Jay Powell is what he's going to be doing in December. I think it's pretty much locked in December rate hike, unless something really crazy happens in the next month. I do have them raising in December. So, but there are economic factors that go into that. Retail sales coming in on Thursday, and then some Fed chairperson and other Fed members to give a couple speeches this week as well. But the big week though from an overall market was last week. We had 3 central bank announcements. We had the midterm elections. We had massive earnings. We're coming out of that. In the next 2 weeks, we should have clear selling from a trading perspective without getting too, inundated with economic reports.
Yeah, it's going to be a fun one. It always is a fun one. Markets are fascinating. It's like a daily puzzle. You wake up, you apply your rules, your system, you find opportunities, ideas. I love them, obviously, on a day-to-day basis. Great job breaking it down. There's 2 other things we do need to talk about before we wrap up here today. Number 1 is Home Depot earnings before the bell tomorrow. Dow Component, probably the only major one here for the week. I'm looking at all the different earnings. A lot of them are IPOs and this and that, your Survey Monkeys, your Tilrays. We'll get to Tilray here in a second. Tencent, so on and so forth. But then Walmart later on Thursday. You have a couple of different earnings reports that could be impactful for markets, Home Depot and Walmart being large mega cap companies. And then one last just kind of note here, Matt, for me, and then you can break down the tackle trading calendar. I have a filter that filters for large cap only and for companies that report earnings over in some of my screeners. And Tilray actually is defined as a large cap company. What in the world is going on? What is the market cap on that company?
It's like
11 billion. No, what? Yeah, 11 billion.
It was 23 weeks ago, but textbook definition, they're mega cap company. Get out of here with that nonsense.
10 billion or more is what it,
revenue and 20 million in revenue, 11 billion market cap. Yeah, that makes sense in 2018.
Well, let me look at, so their income, they actually, no, they don't bring in money. They lose money.
They lose money. Yeah, it makes sense. $11 billion. I don't know what's more crazy, and I'm dead serious here. Tilray, 11 billion. I want to ask halftime crew, what's more insane? Tilray with an 11 billion market cap or Snapchat with a 6 billion market cap?
I think paying Jay Cutler 11 million just for 1 year when you knew he was going to put up the effort he did is even more insane.
We got Osweiler now.
Osweiler.
It's been fantastic being a Miami Dolphin fan. Getting to watch Jay Cutler and Brock Osweiler for the last 2 years.
I think the Snapchat one is pretty crazy.
Snapchat, right?
Yeah.
It's okay. So because Tilray, at least you can see some degree of 10 years from now that marijuana business booming, right?
Right.
Because Tilray's not 11 billion for no reason. Investors, traders, they know that it's not a very good company right now, but it's a bet on 10 years from now, right? So, but Snapchat decreasing viewership, decreasing subscriptions, decreasing everything across the board. Yeah, Snapchat. It's the reason we have a bearish pattern called Snapchat pattern.
There are some interesting companies that do have earnings. Cody, make sure you put it in the prep. We'll break down Tilray tomorrow and Wednesday, kind of see how it's doing. But Survey Monkey, Blue Apron, some reminders of these IPOs this year, Matt. When the market goes bearish, they take it on the chin.
All of those are terrible valuations, mind you.
For sure. And then Walmart later in the week. We got a big week at Tackle Trading. Why don't you break down the events calendar here, if you would, and then we'll wrap this one up.
Yeah, very quickly, guys, just if you ever want to know what we're doing at Tackle and so forth for our pro members, basically, you can always just come here to the main page. And over here, you got your upcoming events. You can view more. Once you click on them, you can always get the link for them and so on and so forth for those pro members. So if you're new to Tackle Trading tonight, guys, on Monday nights, we always do our onboarding session with Coach Frank, where he walks you through the website, the calendar. So if you're new to Tackle Trading or not familiar with the calendar, or, familiar with kind of our what we do at Tackle for our pro members, that, you can always go over and join Coach Frank in that onboarding session. Tuesday nights, we always have our flagship program called the Coaches Shows. And then on Wednesday, Tim, we have our Cash Flow Condors mastermind group, where we break down the Cash Flow Condors system and so on and so forth. Thursday, we always do our Cash Flow Club. And then on Saturday, we report our scatter reports and market scoreboard. And mind you, the market scoreboard is going to be rebranded to the Tackle newsletter for starting in January. So if you see that change in January, know it's planned. We're going to the Tackle newsletter, but it's basically our weekly scoreboard.
I love it. I love it. Guys, pretty much every day at Tackle Trading, you have that Coaches Traders Lounge in the morning, Matt. Yep. Then you've got our halftime report doing our daily routine. And then you've got a premium webinar at night. And then you've got all the content, the blogs that we put out there. I really enjoyed Greg Holmes's rookie blog that he did recently as well. If you're out there and you're a brand new trader and you're wondering where you should start, there's a million places you can start. Daily routine, halftime report here every day. Come and join us. You'll learn just by watching the markets every day, But I do really enjoy that rookie blog. I would always send somebody there because there's a lot of really good information.
And mind you, starting in December, Tim and I will be breaking down the new Tackle 25 for 2019, getting ready to release that in January, Tim. That's always a fun 3 weeks of our life and research and back testing and data. And, then we always look back at our 2018 ones as well. So
I literally, last year's, I was looking at my research for last year, Matt, and I had pages and pages of just manual data, Excel data. That's a wonderful process. We'll go through it as we get closer to it as well. Talk a little bit about the process for sure.
Yeah. So got a lot working out. But Tim, good job by you today. Halftime crew, give us a nice little like and share if you don't mind. We love you guys, and we'll see you same time for I believe it's Delta Tuesday, right?
Well, and one thing I would always tell everybody, make sure you click the bell next to subscribe. So when we do go live, it will tell you, and that way you can join us instantly first off. There's always our loyal halftime crew that come in here right away. So subscribe and click the bell. We're going to be here every day, and Matt will be here tomorrow, same time, same station, breaking down these markets. All right.
Thanks, guys.